Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 102 on February 22nd, 2020. I'm your host, Eric. And in this week's show, we will cover the trades from last week on Jumia Technologies, Tencent Music Entertainment, and the iShares 20-year Treasury Bond ETF. And we discuss three new trades on Inseego Corporation, Teva Pharmaceuticals, and the iShares MSCI Brazil ETF. It's always great to hear from listeners. If you have any questions about the trades presented here or about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a short video series to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit our YouTube channel for the Weekly Option. Now, this week we saw the U.S. equity markets pull back a little bit. The Dow Jones Industrial Average lost 405 points, closing the week at 28,992 points on Friday. The S&P 500 index fell 42 points, closing this week at 3,337 points. Now it's time for the topic of the week. Now the topic of the week this week is boring trades. That's right, boring trades. So some people decide to start trading to add a little excitement in their lives, right? They will treat their capital as if it's money to burn, and they treat the markets like it's a gambling casino. Well, that's not really my style, and you guys know that if you've listened to me for any period of time. Picture this. You're all alone in a white room. There's a red button on a table in the center, and every day that you come in and press that button 10 times, you earn $1,000. So every day, it's the same thing. The button never changes. The walls are never colored. You just have to walk in and press that button. Well, I'm the type to walk in and press the button every day until I find another room that pays me more money to press the button. But I promise you, I'm going to keep pressing the button. Many people would stop. They look for a more exciting job, something more fulfilling or more interesting. Well, to get good at trading consistently, you need to look for that red button. You have to find your own trading style and find the trades that consistently make you money. I don't even know how many specific option strategies, option trades I can discuss on the show. There are probably, upwards of 50, and each one will have a little different caveat based on whether we're going to apply it to commodities markets or equity markets or foreign currency or anything else. So there are all sorts of trades out there that are fun, exciting, keep things interesting. But the truth of the matter is, if you find yourself one or two trades, like credit and debit spreads, that can pay you consistently over and over and over and over and over, and keep saying over and over until infinity or until you're bored with it, like if you find a few ways to consistently make money in the market, then you will be financially set for life, regardless of the amount of money that you have in your account. So the goal is to find the trades, and it may get boring. That's fine. Be patient. Allow yourself to stay interested or excited by the returns rather than the method of how you get to those returns. So if you really need excitement, take a vacation. Go to a concert, go skiing, maybe jump out of a plane, go skydiving, bungee cord somewhere. But when it's time to make money, find that trade that you can do over and over again and just keep pressing the button. So that's it for the week. That's my topic of the week. We'll dive into the trades from last week's, the trade review from last week's trade. So we'll start off with the covered call on Jumia Technologies. And if I'm butchering the name of that and someone knows the actual pronunciation, just please forgive me. But stock symbol JMIA, J as in Juliet, M as in Mike, I as in India, A as in Alpha. At the time, the stock was trading for $5.90 per share. We looked at buying that stock and selling the March 6 call at 75 cents, hoping to collect a 14.41% return over 5 weeks. Well, Jumia technology stock lost a whole 2 cents this week, ending the week at $5.88 per share. The March 6 call we sold for 75 cents hasn't moved at all. The stock chart still looks exactly the same. So basically, this trade didn't do much at all over the last 4 days. So given that our true goal is to collect that 75 cents, rather to keep the 75 cents we collected, which of course is 75 real dollars on this trade, I wouldn't make any adjustments unless you want to exit the trade. So what can I say? This goes right with the topic of the week. Sometimes trading can be a little bit boring, but if you stay the course, then you'll collect your premium. So let's say this stock ends right where it is today. 4 weeks, we have March expiration, and the stock is still trading for $5.88 per share. Guess what? You'll still own that stock, and you get to keep the 75 cents or the $75 you received for selling that call. That is a beautiful thing, because the next thing we do is we sell another call, and this time instead of it being March, it'll be in April. So boring trades, but it can end up making you some money. So let's get into the credit spread for the week. And this past week, looking at Tencent Music Entertainment, symbol TME, T as in Tango, M as in Mike, E as in Echo. At the time, the stock was trading for $13.15 per share. I looked at selling that March 13-12 put spread at 35 cents, which creates a maximum possible loss of 65 cents per spread. Well, shares of Tencent Music Entertainment stock fell 41 cents this week, closing at $12.74 on Friday. The out-of-the-money put spread we sold is now at the money, so the spread can actually be repurchased for 50 cents, which would lock in a loss of 15 cents per spread if you were to close it today. Now, looking at the stock charts, there seems to have been some significant resistance at the $14 level, so I feel okay looking at selling the March 14-15 call spread against this trade. The spread, you would only collect 10 cents on the spread, which is very small for a $1 wide spread, but what it means is that overall in the trade, we will have collected a total of 45 cents, and it actually decreases our loss, our maximum possible loss, from 65 cents down to 55 cents on the trade. It also means that, and this is the downside, this is where you have to understand options. Your only profit range in this is if stock finishes essentially between $13 and $14 per share. If it ends anywhere else, you're going to start to incur a loss. So you might look at the options and wonder why I wouldn't just dive right into selling the March 13-14 call spread. Even though you could collect a lot more premium on selling that option spread against this put spread, it also means that if stock doesn't finish right at $13 per share, then you're definitely going to lose money. So overall with this trade, I always like to see where I'm at. I want to see what what other spreads or trades I can make against it that might either mitigate risk or help lock in some profit. But looking at this right now, I would likely not sell the call spread at all, and I would keep the trade as a put spread and give the stock a few more days of trading to get a better sense of whether it's going to head lower, which would mean we lose more money, or if it's going to pop back like it has in the past. So I'm not opposed to closing it out early and looking for a higher profit trade opportunity. I just, given the market movement over the last 4 days, I'm not convinced either way on this trade. So I'm just going to wait. A day or two more information can be all you need sometimes to decide on how you're going to manage the trade. And then my final trade from last week was a debit spread. We looked at the iShares 20-year Treasury Bond ETF. This is one of the trades, or one of the ETFs that I've liked for a long time. Symbol TLT, T as in Tango, L as in Lima, T as in Tango. When we looked at it last week, the stock was trading for $144.55 per share. I looked at buying the March 144 call spread, paying 63 cents, and that would give us a maximum gain of 37 cents or 58.73% return on your money in 5 weeks. Well, TLT shares grew $3.49 per share this week, ending at $148.04. the in-the-money call spread we purchased is now even more in the money. So you could actually sell the spread right now at 70 cents and you would make 7 cents on the trade, which you could say, okay, we paid 63 cents for it, 7 cents, it's a little better than a 10% return on our money in 1 week. But you realize that as long as shares finish above $144 in 4 weeks, we will capture the full 37 cents on the spread, the 58% return on your capital. So there's no way I would suggest exiting this trade early. If you are in, definitely hold on to it. And we know that a dollar-wide call spread or a dollar-wide in-the-money spread at expiration, it's going to be worth $1. We paid 63 cents for it. So, let's hope that we get to fully make our 37 cents on this trade. Right now, all is going well. So hold on to it. And that is it. So it's time to get into this week's trades. Now, of course, yesterday was options expiration for February. So any trades that you have that are in the money are going to be valued at intrinsic value, and all other trades that are out of the money and whatnot are expiring at zero. So we will look forward to, we're fully into March option trades now. Now the trade suggestions that I have this week, or the trade review, the trade ideas that I'm going to present, many of these will actually have the 50 cent spreads, the 50 cent increment strikes will be priced in on Monday. They're not priced right now. So you might find better pricing or better opportunities on Monday. So take these with a grain of salt, these trade ideas specifically on the credit and the debit spread. And if it makes sense for you, great. If not, definitely look on Monday, because you might see something that is a little more enticing when they price the 50 cent spread strikes. So let's start off with the covered call as usual. This week I'm looking at a company I hadn't looked at before. It's called Inseego Corporation, symbol INSG. I as in India, N as in November, S as in Sierra, G as in golf. Stock ended the week at $9.25 per share. I'm looking at buying that stock and selling the March 10 call at 60 cents, hoping for a return of 14.5% in 4 weeks. Now you enter this trade by buying Inseego shares for $9.25 per share and selling the March 10 call at 60 cents. This trade makes the most money if stock prices finish above $10 per share, and the break-even price is $8.65 per share. So the stock purchase in real terms would require $925, and you would turn around and collect $60 for selling the option. And those values are obviously without taking into account your transaction fees. Now, next up, we're looking at credit spread on Teva Pharmaceuticals. This is a stock we've traded a couple times over the life of the show. Teva Pharmaceuticals, symbol TEVA, T as in Tango, E as in Echo, V as in Victor, A as in Alpha. Stock ended the week at $13.19 per share. I'm looking at selling the March 13/12 put spread at 32 cents, which creates a maximum possible loss of 68 cents per spread. Now, you enter this trade by selling the March 13 put at 77 cents and concurrently buying the March 12 put for 45 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices remain above $13 per share. The break-even price on the trade is $12.68 per share. Now, you would receive, in real terms, $32 for each spread that you sell and have a maximum possible loss of $68 at risk. And then our final trade on the week, and I feel like I'm just zipping through these this week. Sorry about that. But hopefully you guys are keeping up. And, the thing I love about podcasts or any recordings, like recorded audio, recorded video, is that if things go too far, if you're not sure what I said, or you want to even return to this next week or 2 weeks later or whatever, it's a recording. You can always listen to it slower. You can speed me up. I might sound like a chipmunk. That was a horrible effort to speed up my voice. But if you speed up my voice and listen to the show really fast, I'll sound like a chipmunk, or you can slow it down and I will sound really slow. Regardless, just make sure that you get the information that you need in case I speed through it too quickly. So the Deba Spread we're looking at this week is the iShares MSCI Brazil ETF, symbol EWZ. E as in Echo, W as in Whiskey, Z as in Zulu. Stock ended the week at $42.46 per share. I'm looking to buy the March 44.43 put spread for 65 cents, which can yield a maximum gain of 35 cents or 53.85% return on your capital in 4 weeks. So you would enter this trade by buying the March 44 put for $2.08 and concurrently selling the March 43 put at $1.43. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices remain below $43 per share. The break-even price is $43.35. So in real terms, you'll pay $65 to enter this spread, and your maximum gain is going to be $35 per spread. So that's where the 53.85% return on your capital is calculated. So that's it. Thank you guys so much for listening to the show. Man, this show has been gaining in listeners over the last few weeks significantly. So if you guys are sharing it, thank you very much. Please continue. I love making these shows, and I love that you guys come and listen each week. And definitely email me. Feel free to email me, reach out, let me know what you think of the show, or if there are any trades that you've been watching that you'd like me to take a look at. Feel free to reach out. I am actually increasing the number of times I check the email. I used to check it about once a week, and that is not enough now. I actually picked up an assistant to help with some of that, to help keep things in front of me. So that's it. Have a fantastic week. Of course, last week was a 4-day trade week. This week we're back to normal. 4 days or 5 days to make money. So remember, keep pushing the button. Find boring trades that can get you paid consistently, and you'll have a very nice trading career or trading return on your capital from home. So that's it. Have a wonderful weekend. Happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.